Hello, my name is Russell Myers. Welcome to Issues Unite. So I had mentioned before that the price of oil increasing was a rigged game, that this was being manipulated higher. Well, here it is quantified. Even the people that watch the oil industry actually agree with this. So this is from oilprice.com. It is the major website for which reports exclusively on the oil and gas industry. This is all that they do. So let's go to this. So the recent oil price rally can't be justified. Oil prices finally broke the much talked about $80 mark this week, but according to the Standard Chartered Commodities Desk, that is a level that can't be justified. The American Petroleum Institute had reported a draw. A draw is oil production, drawn out of the ground. A draw in oil inventories of 6.1 million barrels in the previous week, well above expectations of a draw of 2.4 million barrels. And yet prices still went up. See, what is going on here has nothing to do with oil production. It has to do with oil traders that have been forcing the price higher intentionally. But I'll get to that. In fact, right here it is. In the 12 weeks since the failed push higher, prices swung lower by $13 a barrel before rallying $16 a barrel back towards $80 a barrel. So they've been trying for months to push it to $80 a barrel. And so it has nothing to do with how much oil is being produced. Stand-Chart, the standard commodities, what is it? Standard Chartered Commodities Desk. All right. Stand-Chart, however, says it remains skeptical that the fundamental case for $80 a barrel is any stronger today than it was in early July. Indeed, the analysts say market balances have weakened in the intervening period. Global demand has remained flat since June. There has not been an increase in the demand for oil. It has not happened. Despite mixed weather forecasts, Stand-Chart says the market may be pricing in lower than average temperatures and overstating the boost to oil demand from substitution for gas. And all significant weather risk appears to be embedded in current prices. In other words, this has to do with oil futures for upcoming months, which is causing the oil prices to increase right now and remain increased for months. This is what they have been trying to do, and they have succeeded. U.S. oil production had been down more than 1 million barrels per day over the last couple of weeks, but crude production ticked up for the week ending September 17th to 10.6 million barrels per day, with more than 84% of Gulf of Mexico oil producers finally back online after Hurricane Ida made landfall at the end of August. The U.S. oil rig count rose by 10 week over week to a 17-month high of 421 for the week ended 24 September, according to the latest Baker Hughes survey, marking the first consecutive double-digit increase since April 2017. 4 of the 17 Louisiana rigs idled by Hurricane Ida became active again, 3 offshore and 1 onshore, leaving 9 rigs still inactive. In areas unaffected by Ida, the main week-over-week gain was Oklahoma's 4-rig increase, taking the state's oil rig count to 38. Within the Permian Basin of West Texas and New Mexico, the Delaware Basin rig count rose by 2, while the Midland Basin rig count fell by 1, and other Permian activity was unchanged at 21 rigs. All right, so let's cover a couple of things here. Keep in mind that last year, a lot of oil wells had been shut in because of lack of demand. A lot of those rigs, those wells, have not been reactivated as yet. They don't have the personnel, they don't have the transportation to to move oil, even if they extract it. So those wells remain shut in. But they are starting to reactivate some of these wells, which is increasing production while demand remains flat. Now, what is the effect on all of this? You pay more for fuel. You pay more for your utility bills. It doesn't just stop there. In this case, it actually increases the cost of your groceries, because transportation, if it costs more to transport items to get them to the grocery store, to the restaurants, to the retail stores, etc., then you pay for it in increased pricing. So if you are paying more for your food, you're paying more for your utilities, what are you doing? Your wages have not gone up, so you have to compensate for it in some way. You're not going to buy that new shirt or blouse. You're not going to buy that new pair of shoes or boots. You're not going to go out to that restaurant. What effect does that have? That means that store, that restaurant, doesn't have as much need for employees. So they start cutting employees' hours. Well, the employee is affected by the same conditions that you are. They are paying more for their food and more for their utilities while they have their hours cut because they're just not needed at their job. And the employer is going to, maintain their profit margin over the needs of their employees, of course, even though this all runs in a cycle, and I've covered this cycle many times. So they don't go out and buy that shirt or blouse or boots or go to a restaurant or whatever. So that has the effect of decreasing the need for other employees at restaurants and retail and what have you. So that leads to more people's hours getting cut or being laid off. And all of this means less, sales tax revenue for states and municipalities. So the states and municipalities don't have as much money to pay teachers and road workers and, or to fix your roads and all of this stuff. So that means they wind up having to cut hours or lay people off, which goes further into the cycle. It keeps on going and going and going. There has been some talk about Biden releasing oil from the strategic oil reserves, but I don't see that happening. The fact is, there's no reason to, because there is no shortage in the domestic United States. Actually, there's no shortage of oil in the UK. There was a shortage of drivers to transport the oil. So if there is no shortage of oil, there's no reason to release the reserves. This all has to do, like I said, with oil traders forcing the price of oil up. And meanwhile, there is nothing happening with wages, and you've also got the unemployment, federal supplemental unemployment that has stopped, and states that are denying unemployment. Yeah, so consumer spending keeps on rising, inflation keeps on rising, while the wages just stay where they are, where they have been for roughly 20 years when compared to inflation. Do you see how this all works? The rich get richer, the rich get richer, the rich get richer, and you pay for it. So this explains what I meant when I said that the price of oil was being rigged. It was being manipulated higher. And it doesn't matter what it does to society or the entire economy. It does not matter. Okay, so as long as they keep on getting richer, that is all that matters. It is the flow of wealth to the top. That's all this is. And they've got people, flunkies, that will defend this. So, anyway, the media is not going to tell you all of this. You know, you have to tune in to alternative media, progressive alternative media, to find out any of this stuff. Because even other progressive outlets are not going to explain this particular aspect unless they hear it from somewhere else first. I'm telling you right up front that this is what's going on. Anyway, be sure and let other people know about it. Talk about it. Share this video. Talk about these subjects. If you can, please donate $1 a month to help expand the channel. Help me continue and expand this work, and so that I can bring more of this out. Okay? Because it gets kind of rough working full-time, overtime, and then doing this on the side. I would much prefer at least being able to cut my hours back at my regular job and just do more of this, because I could bring a lot more out if I could. But I can't do it and still maintain my own survival, this way. Anyway, so again, share this video, talk about these subjects, and if you can, donate $1 a month to help expand the channel, and I will catch you in the next one. Thank you for watching. Bye.